Hey, give me something that is more American than a president speaking at a campaign and getting shot. Oh boy, what a night. Of course, it doesn't happen often that it's a president, but man, like when you see stuff like this, you're like, why do you have the gun laws that you have in that country? It's so fucking stupid. But anyway, yeah, that is very interesting, and I gotta say, actually, very unexpected. It is weekend, and price has moved to the upside. Now, we did get a little retracement to the downside, which is something that I was keeping an eye on. And we moved towards the 382, so that is positive because we were looking for price to at least move towards the 382. But yeah, we also now have the bigger range probabilities playing out. Now, I gotta say, I didn't expect both of the probabilities of the previous update to play out in a matter of, let's see, 15 minutes, 30 minutes, 45 minutes. So of course in the previous video, so the video of last night, I was talking about the potential of seeing something like this, right, with some bearish CVD divergences, and then of course continuation as well, for a bit of a retracement towards the 0.382, right? That was the goal, and then take it from there. And then at the end of the video, we zoomed out and said, hey, the probabilities of this range, mainly also because of all the bullish CVDs, remain higher to take the highs. Did I expect that to happen during the weekend? No, absolutely not. You know, like generally the weekend is sideways, not impulsive. So that is quite interesting. So we had to move to the downside towards the 382, and it just immediately flipped, which is an interesting one. Now, based on what I saw here, I did take a short, but it was a 1 to 3 after price took this low. So you know, I was happy. I saw the impulsivity. I had my plan, which was the 382 pretty much, and a 1 to 3 is a target that I generally like. So yeah, but I didn't have a long, and it was also quite late, 12:15. But of course, the video that I posted last night was online very late as well. So I was still awake as the move to the downside happened, but I went to bed when the move up happened. But also with the move up, generally not too comfortable to trade because I don't know what's going on. Like it's very pumpy during the weekend, so it's likely there's something going on, and then at a later stage, I hear about the shooting in America. So yeah, you know, quite interesting. Now I decided to go live in the morning this time. We will do an altcoin live stream later today. So there will be 2 live streams. This one is the Bitcoin. The next one is going to be the altcoin, which is then later today. So yeah, we're just here, just going to be chatting, observing price action, but also of course doing some Elliott wave analysis of this range, because now probabilities have played out. So that means that there's new probabilities, you know? So yeah, very interesting. T. Clepson, welcome. Brahim, maybe a band-aid. Good to see you. Video Kingdom, Hike, welcome. Eduardo, Bones, Kiwi, Bettina, crazy. Yeah, I mean, it's insane. It's insane. Surprise afternoon live. It's morning for me, but I'll be live later today as well. Christian, good morning. I hate him, but I never want anyone to be short regardless who they are. Yeah, I mean, that's ridiculous. You know, you can hate people, you can love people, but yeah, quite the thing. But at the same time, I'm also like, how typical American is it? Not that you shoot at a president, because that's of course definitely not. But when you observe the globe, of course, most of the shootings happen on that side of the world based on data. So yeah, it's crazy. You know, like luckily only his ear, I believe, was hit, got to the hospital, and I think he's being taken care of. But yeah, you know, you never I guess wish someone dead. Now, I'm not big into politics. I don't know shit about politics really, but yeah, this is stuff, of course, you even hear on the other side of the world in no time. So Luxiri, welcome. Florian, good to have you here. Hunter, Trump got shot. Learning from you a lot. Crypto Circle, Thank you. Cheers. Good to have you here. All safe? Yeah, he's good. He's good. Yeah, his ear got hit. Vicky, good morning. Good morning. Still bottom or bottom finish? Please explain. Yes, on the daily, I purposely didn't really analyze the daily anymore because the 1 hour and the weekly are a lot more clear compared to the daily. And on the 1 hour, we had two probabilities mentioned at the end of the literally previous update. First of all, look for a move down towards the 382 minimum. So we got that move to the downside. And I also mentioned that in this range still the probabilities higher are to take out the high, but I didn't expect it to happen during the weekend, gotta say. So that's an interesting one. Now, all of the bullish CVDs also played out now that we had in this range. So that makes it interesting to have a bit of a live conversation, bit of live analysis as well. JC, Andy, RK, good to have you here. Dara, can it be B in a flat ABC and now it will C to 55? Yeah, that would be the diagonal scenario, of course. So you then have A1 and then A, B, and then a wave C towards the downside. The issue you have for a wave C down is you again have bullish CVDs locally. I've been keeping an eye on it now. So we have here higher low in price, right? Lower low on blue. So you wanna change that. You wanna see price move to the downside. So far from the high, we have a three-wavy move down. So if price is going to move up a little bit higher and moves back to this range, then it pretty much like confirms a three-wave structure. So unless you then have a diagonal, the probabilities are higher to take the high. So of course, even with a flat, you got to wait for some signs of weakness. Now towards the upside, we do have a daily naked point of control, 60.9, and then the weekly 62.8. Right, so those are the two areas of resistance towards the upside. Yeah. Holy moly, coughing a little bit. Keep drinking, keep drinking. Oh, what a night. Dara, welcome. Isaac, I started following you not long ago and I haven't regretted. Thanks, Isaac. Appreciate it, man. Good to have you here and thanks for your support as well. So the weekly close is key tonight. I don't really look at closes. For me, it's just the waves unrelated to the close, but I know people that make use of closes. Yeah. I enjoyed the pump. I was awake, made some hoochunks. Hopefully you had some good food. Talking about what Isaac said, I also saw this message. I still have to reply. Where is the guy? Oh, here he is. I still have to reply to Skoogje. Who's this? Mark Dutch. Maybe a band-aid. So this guy, by the way, Shark, if you're here, cheers, man. I got to reply to that. But Skoogje, I want to thank you for everything you do because I learned a lot from you and I continue to learn. And most important thing is I already see results. That's quite interesting because, of course, I don't give any financial advice. So as much as I appreciate these messages, I don't give financial advice, but it does mean that Skoogje is having a plan, building a plan, executing on his or her plan, which is good to see. So the P&L curve, when I didn't watch you, after I started watching you, then this is 180 days. So you must have been a subscriber for 120 day-ish, I guess. And the P&L curve, nice slow move towards the upside, right? That's what you want to see. That's what you want to see. You don't want this stuff, like very quickly up, immediately down, up, down, up, down. You know, consistency is key. It's better to be slow and steady than being a roller coaster and up and down and up and down and up and down, right? So it just shows that Skoogje now either followed the 6 steps and built himself a plan and sticks to the plan, or at least found a way of trading or more patience or whatever psychology related to actually execute consistently over the 108 day or well, the last 120 days pretty much. So that's good to see. Back above the 200. You're talking about the, what was it, the EMA? Can you take a short look at the weekly time frame? Can you take a short look at the weekly time frame? Sure. I mean, we can do the weekly and the 1 hour. Those are the two I want to focus on anyway. Do you do crypto? Yes, only Bitcoin really. And later today we have the altcoin live stream. So every Sunday we have altcoin stream day. Bitcoin heading, well, at the moment moves up, but the probability is played out. So we're going to analyze this. Thank you, T. Clepson. Keep in mind that on some of the chart from Binance futures, recent high didn't took the previous high. Wait, you're saying that this high didn't take this high? Can hardly imagine. That would be quite interesting. Let's see what happens here. So this is index took the high, Bitstamp took the high. Next one, Bybit also took the high. Binance on my chart, Bitcoin USD 1 hour also took the high. And then we have BingX also taking the high. So yeah, by far most of the charts took the high. But I mean, if one chart did not, I mean, arguably the probabilities are then higher that chart is going to align with all of the others. No? My message question not working. Oh, interesting. I don't know why Doge would be a banned word. Winston, we have the altcoin stream coming up later today in the afternoon, Central European time. I'll probably be live at like 2 or around 2 p.m. generally. So make sure to vote at that moment. But yeah, YouTube has banned words, and I also have certain words that are banned just because of scammers. And you know, the only reason this channel is incredibly scammer free is because I am very, very like sharp, I suppose, on avoiding people getting scammed. So on most of the channels, you'll see below in the comment section all the scammers and all the scam replies and you know, all that stuff. And you don't see it on my channel because I pay attention to it, and I prefer to not have people scammed on my channel. But that does mean that sometimes I have to ban a certain word that scammers tend to use. So I try to avoid, of course, banning words that people use generally. Yeah. So is doggy. I think we actually did Doge at the end of the previous altcoin stream, Winston. So you might want to check out the channel, right? You go to the YouTube channel and then you scroll down, and I think we did Doge in the recent. Yeah, we did. So if you want to have it was a very short look at Doge all the way at the end of the live stream, but later today will be altcoin stream. We're gonna analyze the chart, guys. 52K cancelled. We'll see. That is the reason why I did not analyze the daily anymore, only the weekly and the 1 hour. And on the 1 hour, the probabilities, of course, in the range were higher to take the high. Yesterday, locally, looking for a bit of a retracement to the 382 minimum. Now we got the retracement to the 382, and we also took the highs. I actually didn't expect the highs to be taken during a weekend, but yeah, I mean, that's interesting. So no, it's just another move. I mean, it's of course most common for the weekend is sideways price action based on data. You know, it's like by far most of the time the weekend goes sideways, or you get stuff like this, you know, and then you open again where you left off. But we'll see. You know, take it step by step. It's just price action in the end. So Doge and stuff will be later today. But can all of the recent price move be considered a leading diagonal? We are now completing wave 5 of the leading diagonal. Well, this then has to be your 3, and then you have 4, and this has to be your 5 to the upside. So you would have a leading diagonal, preferably finished here with a flat ABC in that case, or you have a multi 1-2. But let's start, shall we? Could we have a vote for sentiment? Who's bullish and who's bearish? I mean, Yeah, while I go and start the analysis, you guys can vote. Okay, start a poll. Are you bullish? Wait. Okay, bearish. Okay, there you go. Let's have a look. Serdar, welcome. Good to have you here. Good to have you here from Istanbul. I was in Istanbul 2 years ago for the Global Esports Federation World Championship. I had a great time there. Gotta say. Okay. So we have to change some stuff on the chart on the lower time frame. So locally, we will do on the 1 hour time frame a little bit of live analysis, but let's start on the weekly time frame. Also, that was requested earlier in the live stream by, was it Tim? To have a look at the weekly once again. So that is what we're gonna do. Okay. So the weekly time frame. What are the boxes I want to? Oh, there we go. Probably after the live stream, I have to manage some of my stuff here again. Okay. Interesting price action, huh? So let's start. We are, let's see, minute 22. Cool. What I would pick in the woods. That depends on the bear. On the bear, you know. There's this, you have the brown bear, the black bear, and the white one, and there's this little like song or thing where I don't know how it goes, but black stay dead, brown fight back or something, and white you're dead. Something like this. I believe that was that's what you have to do with the color of the bear, if I'm not mistaken. Yeah, okay, 23 minutes in. Let's start, shall we? Okay. So we're gonna start with this scenario again. So I spoke about this scenario for the first time last week, and there's 2 reasons to talk about this scenario. Now, mind you, that is the most bullish scenario. We also have the other bullish scenarios, but on the weekly time frame, generally the scenario or the probabilities from an Elliott wave point of view are highest to still look for price taking out the highs at some point and making new all-time highs. But of course, this scenario is a double 1-2, which is by far your most bullish scenario, as you then have a wave 1, 2, 1, 2, and you didn't even start a wave 3 yet. And your wave 3 is most commonly your most biggest, craziest impulsive wave, right? So of course, this is your most bullish scenario, right? And then you have eventually a big 3, and then 4, 5, 4, 5, finish bull market, and down we go in a bigger bear market to the downside again. So what we're looking at here is a wave 1, 2, right? That is finished. Another 1, 2 that is finished. Now, the reason we started talking about this scenario is actually because of a conversation that I had with Jay-Z in Discord. He's a great Elliott wave analyst himself, and he is active mainly or most of the time in the Gold Elliott Waves channel, so in the Gold membership area. And so we had a chat, and we were considering the double 1-2 on Bitcoin. And that is for 2 reasons. not the real Jay-Z, not actually the singer Jay-Z, guys. So what the hell? So yeah, there's two reasons why we at least put it on the chart and considered it. And that is, first of all, the rule of alternation, and secondly, the wave 4 guideline. So the rule of alternation says that if you have an impulse, 1, 2, 3, 4, 5, right? If wave 2 is shallow, wave 4, you expect wave 4 to be deep, right? Wave 4 tends to be deep. If wave 2 is a sharp, deep corrective structure, you expect wave 4 to be a sideways, complex corrective structure, right? Now, when we look at the price action here, you can see that this is definitely sideways price action. It's a sideways corrective structure. And if we think about an impulse where we count 1, 2, 3, 4, 5, then we expect wave 4 to be a sharp corrective structure, right? Sharp, scary, quick, deep, that sort of stuff. But at the moment, you can see that so far, this price action here is also very sideways, right? It's not very sharp, it's not very quick, it's not incredibly impulsive. It's a sideways range as well. It's not like we have a very deep ABC to the downside, right? B retraced so incredibly high to the 886 as well. It's not that your wave B retraced to the 05 or something and then we got a sharper C to the downside, right? So it definitely has a sideways look to it, as you can see. However, if we then think about the rule of alternation, then preferably we would see a deep one. So the fact that we have a sideways shallow 2 on the 382, a sideways shallow 2, again the 382 has been touched on the non-log by the way, right? Makes it a consideration of a double 1-2 because the rule of alternation as it stands is not really respected. And then secondly, if we do count impulses, right, in a 1, 2, 3, 4, 5, right, then the wave 4 of a higher degree tends to retrace to the wave 4 of a lower degree. That's an Elliott wave guideline, which means that if this is your wave 3 to the upside, your wave 4 is here. So if we are looking at a wave 4 of a higher degree, which is this one over here, preferably price is retracing to the wave 4 of a lower degree, which is the price section between 49.4K and 38.5K. Right? That is most common. It's a guideline. It's not a rule, but it's a guideline. But we are not close to that range, right? The range starts at, let me be more precise here. It starts at 49.1. And we are not at 49.1. Currently, we're back at 60K, and the low was made at the moment at 53.6K-ish, right? What was it to be exact? Actually, I have no idea. 53.5, pretty much 53.5 to the T. So yeah, not close to the wave 4 of a lower degree, which for a wave 4 again is most common. So because of these two, well, rule and guideline, it at least gives us the consideration of a double 1-2, which of course is your most bullish scenario. Now, by all means, you look for, like, you got to take it step by step, and step 1 is take out the highs, and then we will take it from there, because we have this bullish scenario as well. 1, 2, 3, 4, 5, right? One that we've been talking about for quite a long time already. You look for wave 3 to finish, then a 4, and move up in a wave of 5, right? Common target for your 5 is on the chart, pretty much 80K to 100K. Common target for your wave 4 is the price action of a lower degree wave 4, right? So that is 73.8 to 53.5K, and then move up for 5. But in this scenario, you also take the all-time high. The main difference is you're going to start ranging a lot earlier. You're going to start ranging here instead of getting a big wave 3 until you form a bigger range. It's all about the next range. I'll talk about that in a second, a bit more detailed. And your most bearish bullish scenario is that 3 is already in and you have a bigger corrective structure in 4. And then you only have one more push to the upside. But then again, you take out the highs, highest probabilities, that is going to happen, right? Based on Elliott waves, and also we touch the 886 here. Increasing probabilities, any move down is corrective. Increasing probabilities to sooner or later take out the high. And then we have to see afterwards. Now this is your most bearish scenario, right? So you have 4, 5, boom, right? End of the bull market. Now that depends on the range you're gonna form. So in all of these scenarios, we look for price to move up. It has the highest probabilities from an Elliott wave point of view. Now, how do we know what scenario has the highest probabilities? We know based on the next range. Because if we look for a 1-2-1-2 and price to move up impulsively in a bigger 3, then all of the small little ranges that price is going to form are not important, right? You're going to be looking for price to move up, right? Up, until you start creating a range the size of this or the size of this. And only then are we going to start talking about, hey, you know, is this a potential 4? And then another 5. If ranges are shorter in time than these two, right, we likely look for upside. Now, of course, if this is a double 1-2, 1-2, 1-2, and you look for 3 and eventually 4-5, 4-5, your wave 4s, because of your wave 2s here, right, they can be short, they can be deep, no problemo. But you still want to see a relationship between your 2s and your 4s in time as well. And if you get very, very short ranges, it's not important. You want to see bigger ranges. Same is true for here. You want to move up, but instead of a 3 and then start a bigger range here, you already want to start a bigger range here, right? That's the difference. So by all means, the probabilities remain higher on a weekly time frame to take the all-time high. The main difference is what happens after. Right? What's the impulsivity? What is the volume? When do we start a range? And what range do we get? Which does mean that eventually we got to wait for probably a 20 or 30% decline, wait for the retracement, and the retracement will give us all the information that we need. Very nice. So that then brings us to the local price action. Am I going to talk about the daily? Yes. Let me shortly at least do this. Okay, we're going to do it. 1 second here. Where did I put everything? Oh, here we go. That is 1. That's 2. 3. Oh, there we go. This one. And this one. Okay. We will at least chat about the daily. Okay, daily time frame. I already spoke about the 886 on the chart, right? And this 886 is taken from the high to the first low at 56k. Now the 886 is touched twice. Now by all means, the 886 is a rare target for a wave 2, common for a wave B or a wave X, increasing the probabilities to sooner or later take out the high. So in other words, it supports the context of the weekly time frame, right? And that's nice because you do like to see a bit of confluence between the different time frames. Now in this scenario here, we have a leading diagonal in a wave A, 1, 2, 3, 4, 5, corrective structure in your B, 5 wave move down in your wave C. Now for the bulls, it is important to take out 63.8k, right? That is the high where the probabilities switch bullish pretty much on a daily time frame. Now by all means, right, on the higher time frames, the probabilities are bullish. We have hit the target area for a wave C and an ABC, right? You can see the 1-to-1 is hit, 54.6k. Even in the WXY, which is another scenario here, WX and then a wave Y, the 1.236 is a common target, has been hit, right? So we are hitting target areas, but you can also see we do have enough room to the downside still. It's all about what is your own trading plan, you know? So you need a plan, you need a strat. But by all means, we are, in other words, reaching interesting target areas and interesting support areas, right? So the 1-to-1 hit, 1.236 hit. Now for price again, it is important to move above 63.8k, and that is twofold. First of all, if we're looking for an impulse down in a wave C, right, we have to be aware of the potential. Now this is really messy price action, so I don't really want to go into it, but we at least have to be aware of a 4-5-4-5 type of move, where this structure to the upside once again is a 4 instead of an impulse. If you move above this level over here, right, that becomes very unlikely. Right? High probabilities for more bullish scenarios. Second, we have a support resistance area here. And this support resistance area has played a significant role in this range so far. And we are testing this support resistance area once again. Now what we're looking for here is similar to what we saw here. Move up above the support resistance area, retrace down. Eventually there's always at some point some retracement to the downside, right? Sharp move down, everyone's scared, all the way back up to the 886. Right? Sharp move down, everyone's scared, all the way back to the 886. Yeah. So you know, there's always eventually a retracement. But we had a move up, retraced to the support resistance area, big bullish CVD divergences, and we moved up to the higher end of this range, right? So for the bulls, you want to flip this area, you want to move above, preferably take out the high, of course, retest, see signs of strength, and then we're going to be looking for price to move towards the upside. At the moment on the daily time frame, the market structure is bearish. Now locally, we were looking for price to move up, right? Based on the structures that we counted locally in this range, right? So locally, like on a 15-minute, we were looking for price to move down into the 382 minimum. But sooner or later, as explained over the past many days, we were looking for the highs to be taken. Didn't expect them to be taken during a weekend, because generally the weekend is sideways and not really, you know, impulsive. But we did, and now we are inside the bigger support resistance area. Now, for your information, this area is between 59.2 and 60.4k. Now, important resistance, and also this is important, the value area volume profile on the chart, nicely respected as well, and you can see that we are approaching the value area low, right, which is sitting at 60.7k. So that's also an area of resistance, and same with the support resistance area. You want to flip the value area low. Now let me actually take it here, because I actually do prefer it here. So there we go. That fits better. You can see the clear resistance of the value area low. We did move back inside, but not a retest and structure change. No, we lost the value area low, and that is what you like to see, right? The retest, structure change, move up, higher probabilities to move to the point of control and the value area high. So we definitely still have a little bit to go. But on the daily time frame, we are hitting support areas, both the WXY and the ABC, which of course are interesting for potential swing. I mean, arguably depends on you as a trader, but swing positions to the upside. And generally, when you start to hit target areas, those are generally not short areas, no, because you're at the lower end of the range. Now, if you're a scalper or a day trader, you can short wherever. I have also shorted here twice in the past 3 or 4 days. But from a higher time frame perspective, you got to be aware of where you are on the chart, and where we are on the chart is we are approaching support, or have approached support areas. Now to the downside, we do still have more support. First of all, the 1.236, 50.5k, right? But also, now I gotta open a few things. Weekly gap, 53K. Weekly order block to the downside, around 52K. Value area high of the 2021-2022 all-time high range, 49.5K, pretty much 55 to 49K. And the weekly channel midline over here. Right, so we definitely have some areas of support besides the same old, right? So the point of controls here, 51.8, monthly point of control. The red is a range point of control. We also have a weekly over here as well. Then we have daily naked point of control. So there's definitely an area between 49 and 52 that is interesting from a support perspective. The low that was made here was based on a daily naked point of control. So we did have some support at that area. We also, of course, had the one-to-one of the zigzag here. So very nice. Okay. So that's your daily, right? Okay, the 1 hour. Interesting. What's happening? No, the poll is just because people ask like, yo, can we do a poll about sentiment? So I was like, yeah, sure. We can do a sentiment poll. Look, I just have Elliott wave probabilities. Wow, 111 votes, guys. That's a lot. I never have I trade probabilities. I don't trade emotions. It is. Elliott waves is very technical. That is correct. I always try to explain it as easy as possible, which I can't make Elliott waves easier than what I do, right? Minimal information on the chart, and only have bits and pieces on the chart that are relevant for what I wanna say. But that is Elliott waves for you. So if you really have no idea what's happening, I would recommend to go to my channel and check out this playlist. It will take about 1.5 hours, I guess, to go through all of the videos, but you'll have a very good idea of what's up. And all of the videos except 2 are shorter than 8 minutes. So it's also quite easy to get through, right? So yeah, that's one I would recommend. But I agree with maybe a band-aid, you know. Keep it nice. Okay, so we probably have to do a little bit of live analysis here as well. So let me have a look. So this is the zigzag. That one is taken as well, so that's gone. That gone. And CVD. Cool. And the simple cool. Okay, so yesterday we had the move to the upside. Now, if you have seen the update I posted last night, then price didn't retrace to the 382 taken from this low to the high. 1 second. So the probabilities in the range, zooming out, right, were higher to take the highs. Didn't expect it to happen during the weekend, as mentioned before. Locally, we were looking for price to move towards the 382. As price moved up from this low here, we never actually retraced to the 382, which is a common retracement, right? Like a minimum retracement for most of the structures. So I was keeping an eye on local price action to the downside. So last night, probabilities on the 1 hour a bit higher to move towards the downside towards the 382 at some point, right? I didn't like it. It was a very quick move actually, and and it's weekend. So that was a little surprise, but we moved down towards the 382. Okay, nice, check, played out, right? Relatively short move. And then we also had the probabilities of taking the highs playing out 30 minutes later. Didn't see that one coming. But hey, do we complain? No, absolutely not, right? So now that these probabilities have played out, we got to reanalyze this structure and look at both bearish as well as bullish options. So the CVD divergences have played out. All of the bullish ones are now done. So that's good. So we can remove these. We can remove this as well. So we've been talking about that now. We have this, and I'm gonna put one on the chart. This is one that Samith, I don't know if Samith is here. This is one that Samith was keeping an eye on. Green, blue, white. Okay, I need to go up. 4. So this is, of course, by far your most bullish scenario. Yesterday I mentioned 1 2 1 2 1 2 1 2 1 2 1 2, you know, and then yeah, arguably you have another one here. Up. Definitely not the prettiest. So we have a zigzag to flatten to zigzag to continuation. Of course, this is your most bullish. Of course, pretty much what you're looking for is continuation on a high amount of volume. Okay. So let's start talking about the bullish scenarios and then look for some bearish ones. Yes, exactly, Master Dummies. Probabilities is most important. Okay. So scenario number 1, right? The diagonal. So just want to highlight that the probabilities of the range have now played out, right? So we took the high, and that was the highest probability in the range that we have been in here. So the fact that these probabilities now have played out means they're neutralized because we now took the high. So we have to observe price action. Now, a quick side note, as long as price is moving up on volume, gotta wait for a range to form from an Elliott wave point of view. The range, the next range, will give you all the information we need, meaning we want at least a couple of hours of sideways price action, right? As long as you don't get a sideways range for at least a few hours, we just look up. Yo, Bilyamin, welcome. Good to have you here. Okay. So we had the potential diagonal 1, 2, 3, 4, 5, A or 1, looking for B or 2, continuation to the upside in A3 or a wave C. Common target for your wave 2 is the 05786. Common target for your B is 382886. For a wave 2, the 382 is an uncommon target, but a target nonetheless. In this diagonal, we have sometimes been talking about wave 3 being a little bit longer than your wave 1, which is not ideal, but it is not an invalidation. Right? And then we have four overlaps with the price action of wave 1, which is what you like to see in a diagonal structure. And then you move towards the upside with the wick, the news wick here, taking the high of 3. And that is nice, as on most charts, this wick actually took the high of 3, so that's fine. And ending a diagonal on a high amount of volume is actually quite common as well, so that's pretty good. So then we had a wave towards the downside. Now you can see this wave structure is very short. If this is the end of B or 2, in this scenario, that would be a very short B or 2, no? You take a fib time from the start to the end of 1A, and preferably a corrective structure, B or 2, ends after the 0.382 Fibonacci. Fib time, I should say. Well, it's Fibonacci related, but after the 382 fib time, which is Sunday or after Sunday, so next week. Now, the only way to get a corrective structure to the downside that ends after the 382 is a flat, because we took the high now, right? So therefore, that now becomes your bearish scenario, no? So you then put the expanding flat fibs on your chart. So if price moves up to the 1.618, the probabilities significantly decrease for a flat and increase for more bullish scenarios, where you're working on a C or you're working on a bigger 3, right? In other words, we got to wait for a bigger range to form. As long as you don't get a bigger range, you look for price to move up. The 1.618 is 61.3K. So in this scenario, we are then looking for price to move down in a flat. The minimum target for a flat is the low that we made here at 56.5K on the chart, pretty much on top of the 0.5, right? So you then want 2 or B to finish here. And your additional support areas to the downside include this blue box, 55.7, 56.2. In confluence with the golden pocket, which is always a common target area. Now, as you can see, we have hit the most common target area for a wave B in an A, B, C for a flat structure. Let me actually drag this into my folder and also label this. So this, of course, is now a bearish scenario. We will get to the probabilities in a second and what to look for. And that's actually more important. What to look for is now more important because of the current move up. So because price is moving up on volume, generally the best thing to do is to wait for a range to form. So let me drag this here, make it look a little bit pretty. Very artistic. That's 1, that's 2, that's 3, and that's 4. That. Oops, misclick. There we go. Okay. Now, clearly this is your bearish scenario. Before the probabilities for this change, right? Or no, I should say this different. For probabilities for this scenario to increase, yeah, you can, thank you, maybe a Band-Aid. That was a very good choice. So for probabilities for this to increase, you first need to see local weakness here, right? Weakness meaning a market structure change, minimum, bearish CVD divergences, volume to the downside, a bigger sideways range on the Sunday that gives us trust and more confidence for price to move down. Because at the moment we are moving up. And if you look at the structure to the upside so far, right? It's not a bearish structure, right? So you wanna see, and we want, first of all, wait for a structure to change, bearish CVDs, sideways price action. As long as you don't see that, it doesn't make any sense to go short into a pump, in my opinion, which is a personal opinion and never financial advice. So we have this scenario, we are prepared, and preparation is the key to success, right? As they generally tend to say. But now I need look, I'm always interested to go long and short, but for me to have any interest for a short here, I need to see local weakness. I don't care about shorting the high of a move. I care about probabilities, and they are not yet in my favor. I need to wait for a range to form, want to see weakness, structure change, bearish CVD, levels lost, fall back into the range, and then I'm interested, right? Because then I have a high probability scenario, a high probability plan for a short, and then I take the 50% of the move, right? I take the middle of the cake, pretty much, right? I have no problem with taking the middle. I don't care about getting the high or the low. But at the moment, there is no reason for me here to look for any shorts. So I remain very patient. And it also is still weekend. Your most bullish scenario is multiple 1-2s. Oh, and side note, what I do like to say about the flat, by the way, is something that Bettina has found in Discord as well. So there's a file that I shared in Discord, which is in the community content. No, 1 second. So, right. Check out these files if you haven't, if you want to educate yourself more with a lot of data. Very interesting. And after diagonals, generally you want to see a sharp corrective structure. That is most common. A flat after a diagonal is not very common, right? So that's with regards to probabilities, right? Again, I want to see weakness. But as long as you don't see that local weakness, probabilities are not on the side for a diagonal that is finished or either finished or looking for a flat. Right? Diagonal, looking for a flat, and then continuation to the upside. So, yeah, arguably you would then be looking for A1, B2, C3. That would have a higher probability compared to looking for a flat after a diagonal. Let me see what does this here. Well. So your most bullish scenario are all the 1-2s. 1-2, 1-2, 1-2, 1-2, 1-2. Now it is common for a multi 1-2 setup to have the same corrective structure. It's not a rule. It's not a requirement. But it is most common. So zigzag into, zigzag into, zigzag into, but then you have a little bit of a flat because this high took the high here, right? Happens. But that is a multi 1-2. Now this is of course your most bullish scenario because here you expect price to continue towards the upside into wave 3s. So in other words, up, increasing volume, and then at some point in time, we're going to be looking for 4, 5, 4, 5, 4, 5, 4, 5. Because for each 1-2, you need a 4, 5, right? First of all, your wave 3 is most commonly extended. So we take a trend-based SIP from the yellow. Start of 1 to end of 1 to end of 2. We make this one yellow. Then we do the same for green, because now we're going to observe the 1.618 is generally a minimum target for a wave 3. And if you are talking about a multi 1-2, of course, you want to hit 1.618, because after a multi 1-2, your wave 3 should be out of this world, right? Should be the most, by far most impulsive structure. Do we hit this? No, not yet. So here are some targets for you on the chart. So you definitely want to extend impulsively to the upside. Now it is weekend, right? And there we go again. Generally, the weekend is a sideways ranging structure. So in other words, the longer we stay here, the more bearish it is. But at the moment, we don't have that price action on the chart. We don't have the sideways range. So we don't have the weakness locally just yet. But what we are looking for is impulsivity to the upside out of this range on a high amount of volume. And then at a later stage, we get 4, 5, 4, 5, 4, 5, right? Now, these are 4 4 5s, and I don't mind having like a 1 2 1 2 and then push up, or a triple 1 2, but having 4, I let the local price action speak to me, right? For the longs were best taken inside the range anyway. I am currently not in a long position. I have no interest to long at the high. I want price to tell me what it wants to do. I can always enter at a later stage. I have no problemo with that. But in the multi 1-2, your invalidation is clear, 57.1k, and we know what we want to see. Impulsivity, high volume, and not price going sideways again for a very, very long time, right? If we are working on wave 3 now, here, we look for continuation to the upside on a high amount of volume. So we will wait and see. And then we get to the probabilities. So on a weekly time frame, the probabilities are higher to look for all-time highs. On the daily time frame, we are hitting support areas. So it starts to be interesting to look for potential long setups, to look for signs of strength. We still have support to the downside between the 53 and the 49k area, which is a great area of support. And then on the chart here locally, right? Now that price has broken out and we took the highs here, which was the highest probability scenario I mentioned earlier in the analysis, now it's about seeing what local price action give us. The multi 1-2 generally don't really like 4 1-2s and then a breakout in the weekend. But for a flat, like the flat, you first need to see weakness. So it's more important now that the probabilities have played out to observe price action and know what we're looking for to make decisions. Meaning, for the bears, right, if you're bearish, important to see signs of weakness. What does that mean in my opinion, for me, right? Everyone has their own tools. I want to see market structure change, price falling back into the range, bearish CVD divergences, a sideways ranging structure, right? Losing levels of support, turning back into resistance. That is what I find interesting, right? That is what I keep an eye on. As long as price is moving up on volume, I don't care about going against the local trend. I need to see the weakness first, right? And for the bulls, you simply want to continue to the upside with bullish CVD divergences. We have a daily naked point of control at 60.9, weekly naked point of control at 62.8. Now, let's see if we can also, so that's the probabilities in a nutshell. Now, let's have a look at bearish scenarios for a second here. A bit of live analysis coming. So we have, wait, let me do this. You see me do this sometimes because I like to check this. Okay, so let's analyze. If your high is in or if you're bearish, you need to have one of these structures since the low. So we are going to cover them one by one. This will go quite quickly and it might be a bit technical, but here we go. If we look for a zigzag to the upside, a zigzag is a 5-3-5 structure, so either A, B, C. Now this has been invalidated for a C down because price took the high, so we can't have an A, B, C like this. We can have a wave A, a wave B, WXY, and starting a wave C to the upside now, where we then have a wave 1, 2, we look for a 3, longer sideways range in 4, then a wave 5, new high, lower volume, move towards the downside, right? So that is your potential A, B, C structure A, B, and then a wave C. The alternative is, of course, A ending here after a diagonal, A, B, and then a wave C to the upside. In both cases, however, your invalidation would then be this low. And what we are looking for first is an impulse to the upside, which means we want to see a wave 1, 2, wave 3 price action, sideways range in 4, one more high in a wave 5. One more high, preferably on a lower amount of volume, but in a wave C of a zigzag, you can end on a high amount of volume, but then we want to move down impulsively. So that would be your bearish scenario. Bearish scenario being a zigzag is a possibility here, either A, B, C, or diagonal A and then B and then a C towards the upside, right? So bearish scenario A, B, C is an option. Now let's have a look at the target area. Yeah, last time I did this, well, we already, no, I like to look for local, we already in the target area for a wave C. So it's all about local price action, therefore about the local weakness, which is something that I've talked about already. So a flat structure, if we have a wave, a bigger flat. A bigger flat is not possible because we then talk about A, B, C because we are now counting corrective structure starting at the low. So we need A, B, C, but wave B didn't go deep enough. The 0.9 Fibonacci taken from the low to the high has never been hit. So therefore a flat is out of this question. Triangle doesn't work. I actually got a question yesterday. I think it was, I was talking to Tim. He had an A, B, C, D, E on the chart. If I'm not mistaken, or something like A, B, C, D, E. Tim, help me out here. Yeah, very, very interesting. We have a flat that is not allowed. Triangle does not work here, right? So triangle is out of this question because we then need A, B, C, D, E, but your C went above your A and that is not allowed. And then we have W, X, Ys. Now your W has to be a zigzag structure because it is not a flat structure, right? A, B, C doesn't work. So your W needs to be a zigzag towards the upside. Okay, there we go. Problem solved. So we have a W towards the upside, which is a zigzag, right, towards the upside. And then we have our wave X and eventually a wave Y. Now, because wave W is a zigzag, right, your wave Y can only be a flat or a triangle. But at the moment, a sideways corrective structure here in a WXY, WX, and then eventually a wave Y. We don't have a triangle here. We also don't have a flat here. So a WXY doesn't look that nice. So a zigzag has the highest probability from a corrective point of view, right? So therefore, your bearish scenario would be a zigzag to the upside, A, B, C, right? We know our area of interest and then take it from there. So, holy moly, man. I'm Dutch. I don't have patience, right? Either people are here to learn or they're here to shit around. I don't care. But if you are, then you're gone. It's quite as simple as that, no? Yeah, let me talk about another trade that I took, by the way, for all of the watchers here as well. So which one are we going to take? I need to check the time. So I had a short here, which was around the 11th of July 20. Where's the 11th? Was it the 11th? Yeah, 11th of July. Up. Oh yeah, there we go. 11th of July, right? Ended a short on 21/11/34, which is 21/11/34. 21. That's in this candle. So 9 p.m. 11 minutes above 9 p.m. and 34 seconds. Opened a short with a field price of 57,668, which was 57,668, which was over here, right, at the low of that candle. right? And then I closed the short the next morning, like I said on the live stream here, and I closed it at 10 a.m. and 9 minutes, right? So 9 past 10 a.m. on the 12th with an exit price of 57.176. 57176. So that is over here, and 1009 is here, so to be more precise. So I had a short here as well, right? I can continue, right? I'm happy to trade, but obviously I'm not talking about entries here. Your ass has to trade for yourself, you know? I'm not here to provide signals. Fuck that. Want to go signals? Go to the Moon Boys or something. No? So we don't do that shit here. The only thing I can do is provide information and provide education. Huh? You either want to get taught or you don't want to get taught. You know, I'm not here to give fish. I'm here to help you fish for yourself. So in Discord, also in the setups channel, we talk about interesting setups from an Elliott wave point of view and why they are interesting, right? And then I explain a little bit more about what I am looking for. No? From an Elliott wave point of view, could have a finished impulse to the downside. Interesting to look for a long at the daily naked point of control. Remember this one, right? Observing. Long was nice. Potential for a short, for a potential zigzag. Due to all the bullish CVDs, I do first want to see proper signs of weakness before consideration, right? We didn't get proper signs of weakness, but I do mention what I am looking for, no? So, yeah. Anyway, man, it's so pissing me off, these type of people. Anyway. In the sandwich, I know, right? Yeah, exactly. Is this move looks like as we went across 20k, if you can remember, or you... oh, 20k. Ooh, that's a long time ago, hey, 20k. Now, of course, with 20k, the difference there is we knocked on the door of 20k many times, right? So that is a while ago already. 20... Oh, no, wait. I'm talking about the 12k, 13, 14k area. I don't really see this range as here at the moment, no. Also, people keep comparing the current market structure with what we had in the past, and I get it in a way, but every bull market has, of course, its own characteristics and its own ranges. It's very difficult to say where you are here compared to a previous bull market because the structure that you have is completely different so far, right? This is a very different structure so far compared to anything we had here. Arguably, this here looks most alike, but look how small this move is compared to how big this is, right? So it's difficult to compare different bull markets, and that's also the reason why I actually never do. I never compare the bull markets with one another, only in time and price. So when I take the whole move to then get an estimation of the bull market targets for this bull market. Now, this now confirmed a three-way structure, of course, locally, so it increases the probabilities to take out the high here at some point. So there's no sign of weakness. Do we have the 886? Let's see. Did we touch it? No. Cheers, Yoshi. Yeah, exactly. And that's also what I do, right? Analysis, the things I look for, and yeah, that's all I can do. So you know, be a bit more precise in the past. 1 second here. Okay, so in the past, wait, where are my dates? Oh, there. So in the past 3 days, from the 10th to the 13th, I have 10.1 R win rate, 67%, and 4 wins, 2 small losses, 10 R, which means 10%. Perfectly fine to me. We hit the 886. Probabilities increase to take out this high. Have you ever done a live analysis that led to an entry while you were live? Yes. But I never say when I go live or enter a long at that moment in time, because I don't want to influence all the viewers. I was live here. And that is the entry that I just spoke about as well. So I entered a long here while being live on live stream. Yeah. So we hit the daily naked point of control, and this is where I then entered a long where my target was the golden pocket and the low of this order block, which was hit here, right? And that was a 1 to 2 R. Seven months. The video kingdom, 7 months, you know. That's crazy, eh? Thanks for your support, man. And Jingle, welcome. Good to have you here. Welcome, welcome. Roosbe, I'm lucky to find your channel. Great information. Cheers, Roosbe. I'm glad you like it. Glad you like it. Have a good weekend, everyone. Sibel, welcome. Good to have you here. Bitcoin View. Oh, we finished the analysis. When did I start the analysis? Ooh. Elliott wave analysis at... We started at, I think, like what, 22 minutes? There we go. Let's end this, by the way. That's fine. Which time frame to follow? Yeah, it depends on the time frame that you like to trade or whatever you use, right? You gotta take out what's relevant to you. Never a financial advice. But as an Elliott wave analyst, you will have counts on different time frames, right? You need one bullish, one bearish on every time frame you analyze. So if you do the weekly, you need a weekly bullish and you need a weekly bearish. I do have the bearish one, but it's in the folders hidden somewhere because it's not yet relevant. So on the daily, you have a bullish and a bearish. On the bearish one is an impulse down. In the local range on the 1 hour, you need a bullish and a bearish. So it depends on the time frame. If you only use Elliott waves for swing trading, right? Meaning you are trading on a daily time frame, well, you're going to be having one daily bullish and one daily bearish scenario, and probably a weekly bullish and a weekly bearish scenario, and that's it, right? But you gotta pick the pieces that are relevant for your analysis. So if you are a day trader, that's when you're probably going to be counting the 15 minutes and the 1 hour most of the time. You don't even need the daily or the weekly, because of course on a weekly time frame, entering a position on the 15 might not really influence your trading on such a low time frame. But by doing multi-time frame analysis with Elliott waves, you can get an entry on a 1 hour or a 4 hour time frame. And if you enter that position at an important level on a weekly or daily time frame, your low time frame entry might become a bigger swing trade, right? So that is where things are interesting. So the weekly, of course, bullish. On the daily, yeah, we eventually still look for price to, because the weekly is bullish. And on the daily, we are hitting support areas, right? So, and then on the 1 hour, the probabilities were higher to take these highs, which we have now done. So, yeah. And yesterday, last night here, right, the probabilities were higher to drop towards the 382 because we haven't hit the 382 during this whole move up. So I was looking for at least the 382. And I didn't expect price to actually move up during the weekend like we do now and take out the highs. That's an interesting one. But you can see that none of the retracements here moved to the 382, right? So we were looking for price to move towards the 382. And as a minimum, now we got some bearish CVDs, moved very quickly to the 382 and then just gave it all back and immediately moved back up. Oh. Local probabilities 382 touched, okay, perfect. And yeah, the probabilities of this range were higher to take the highs. Did I expect it to happen during the weekend? Nah, not really. You know, it would usually be like a during the week markets open type of thing. But, you know, happens. Yeah, it's a solid quick move to the upside, bit of a range. We had some more bullish CVDs here as well, by the way. So here, higher low in price, lower low on CVD, right? Bullish CVD divergences. These have now played out. Also the ones here, higher low, lower low on blue has played out. We now took this high. So yeah. Have you ever had a string of waves that made no sense? That made no sense. Ooh, that's a good one. Well, did I have a string of waves that made no sense? I can answer that question with a yes, as generally it's the triangles that don't make sense, because when you don't really know what's happening, it's generally a wave 4 or a triangle, meaning wave 4 complex, right? Some WXYs, for example, or you're looking at triangles. It's generally one of those two. And it's not like you don't know what's happening, because that, and this is the thing with Elliott waves. The moment, for example, on a low time frame on a 1 hour, if you don't really have an idea what's happening, just zoom out. Don't zoom in, zoom out. Go to the 4 hour, go to the daily. Focus on the higher time frame till the lower time frames become clearer again, and then go back to the lower time frame. Right? So I remember this little range here, very triangle-ish structure, and this was not the easiest range to count here. Right? It didn't make too much sense. Very condensed, very like, you know, converging. However, the reason here, you can go to the content on the 6th and April 2023. The reason probabilities were higher to move up in this area here, right, were part of it, at least the bullish CVD divergences that we had here after a big push, sideways structure, bullish CVDs, very important. I like to use CVD. Probabilities higher to move up, right? And we had overlap, and you don't really want to see overlap between a 1 and a 4. So preferably we were going to move at least one more time up for 5 instead of this being your 5. Also, if this was the end of an impulse, right, and this is a corrective structure, it just took very long. There's no sharp impulsive structures. There was no 1, 2, 3, 4, 5. There was no diagonal, or there was no multi 1, 2. So even though I did not really get a good grasp of what is forming here, you can get a good idea of the probabilities because of bullish CVDs, no impulse structure to the downside, and the time was long. So I was looking for price to move up. Now, something that you see me do quite often is put on a chart impulse, diagonal, or double 1, 2. So if you do make a low on a chart, right, and price is moving to the upside, can we count it as an impulse, a diagonal, or a double 1, 2, and at least give it some proper probabilities? If you can, there is the potential for a bullish scenario. If it's very difficult to get one of these three, probabilities are higher, you're dealing with a bearish corrective scenario. And counting corrective structures is most difficult in Elliott waves. I love the puzzle myself, but especially if you're newer, counting corrective structures is very difficult in the beginning. So what I then recommend, and that's a little tip I sometimes do myself as well, is just look at, is it impulsive? Is it an impulse? Is it a diagonal? Is it a multi 1-2? If it's not one of these three with high probabilities, or at least some proper probabilities, you're looking at a corrective structure, increasing the probabilities for price to move towards the downside or upside sooner or later. And then you're just going to be looking at a corrective structure. You may not know if it's WXY, triangle, ABC, flat, but that's just practice. A proverb in our country: education, school, takes away ignorance, arrogance remains as it is. Don't let them get on your nerves. Yeah, I always, you sometimes you have those people that I don't know what's happening in their own lives or what they're dealing with, but they bring it to the channel, and those are like the people that it's just annoying, so. Oh, you're only, you're talking about analysis. You're not live trading. No, of course I'm not fucking live trading, mate. I'm trading for myself, You need to trade for you. Yeah. I think in a way it's, first of all, you can't help anyone. Clearly that guy does not want to get help, right? He wants to get the fish. He doesn't want to fish for himself. So it's a lazy motherfucker. And you of course already for over a year, I upload pretty much 3 pieces of content a day, if not more, including diamond, including gold and stuff. Doing Elliott waves, all the probabilities. Now, if you have been following along, and especially the people that are here for a long period of time, they will know that the probabilities have a high probability, right, of playing out. Else the channel wouldn't have grown to, what is it now, 12.5K in 1 year and a few months. And sometimes you get those people, and I guess in a way it annoys me, but it's also, I guess, a bit sad. You try to do your best, and you always have those people that don't really appreciate it. However, there's 12,500 and something people that do appreciate it, like all of you, and that's my main focus. But whatever, that guy's gone now. So we won't be bothered by him anymore. Yeah, I agree. Quite a volatile weekend. So some analysts, so much volume, maybe due to the breakout. Yeah, it's also, of course, the resistance level that is passed over here that we have been testing for a while, right? Bigger support resistance area as well. Afternoon, Del, good to have you here. So after a wave is fully completed, Elliott wave always satisfies the patterns, is what I mean. Yes. I do. So personally, I use Elliott waves for direction, and I use other tools in confluence with Elliott waves as well to find my entries. And because that's just I like to have that extra lower time frame confidence. I tend to enter on a 15-minute. But yes, there's always a way to count the chart. And again, if on a certain time frame the chart is not very clear, the structures are very ugly, it's better to zoom out. So if you have no idea what's going on a daily, go to the weekly. If you don't know what's happening on the 1 hour, go to the 4 hour or the daily. If you don't know what's happening on the 15 minutes, go to the 1 hour, the 4 hour or the daily. Zoom out, right, where it is clear. Trade the clarity time frame. So maybe trade a daily, trade a 4 hour. And only when locally on the lower time frames things become clear again, you can jump back in. So sometimes you just have to wait for clarity to come. It's not always as easy. What are your big mistakes in trading that you don't want your followers to do the same? Good question, Andy. What are your big mistakes you've done in the past? Yeah. Number one is if you are new to this industry, don't put all your money, including your savings, in an exchange. Trade with high leverage. Don't even know how the platform works. And then hope you win, because that was my first trade ever. All of my savings and stuff were were in the exchange. I went long, high leverage, liquidation was my stop loss. I made a banger, can't deny, but oh boy, was it the most stupid trade I ever took. So please don't do that. If you enter this industry, and then I lost everything after because I was a noob, right? And didn't know how to trade. So if you enter this industry, enter with a low amount of money, build experience, and build a plan, right? Because you're not going to get rich quick. So and especially at the beginning where you don't really have experience, it's very likely you lose money. So it's a waste if you lose all of your savings. Now that didn't happen, by the way. So I made a big win and then I lost the win and just a little bit more. So that's okay. So that would be tip number one, is start small, right? Don't start big. If you want to be a trader, don't care about price. It doesn't matter if Bitcoin is at 100K or 10K. If you are a day trader, don't care, right? If you're an investor, you want to see high time frame moves up. But if you're a day trader or a scalper, it doesn't matter if price is at 60K, 50K, 70K, 100K, 10K. You just trade the volatility, right? Another one that I think is important, which I guess is one of my biggest mistakes as well, is not working on trading psychology from the very beginning. And that is mainly because I didn't know about trading psychology. I thought that trading was all about the technicals. It was all about having my plan. And yes, having the tools and having a plan is important. But if you have a plan without solid trading psychology, you lose. And one of the biggest, I guess, mistakes, but I didn't know, is that I didn't simultaneously, while developing my plan, was studying trading psychology. So work on your trading psychology while you develop a plan. And that's also why in the 6 steps that I always talk about, I include trading psychology, right? I first say, step 1, build experience with all the different tools and things in TradingView and indicators. Step 2, find your favorites, build statistics. Step 3, combine some of your favorite tools, build more statistics. Step 4, tweak and adjust, right? With your strategy, add a tool, remove a tool, build more statistics. So the step 1 there is you create a strategy. It takes a lot of time and energy. But then step 5 is start trading that strategy with a low amount of money and work on your trading psychology. Now, if you can include trading psychology already from the very beginning, right? Step 1, step 2, step 3, step 4, you can already start with psychology. That was almost my bottle of water. In my case, I only started with trading psychology. I already had a plan. I had a way of trading. I was already active, but my psychology was my biggest weakness. And only later, I started to go into, I recognize this psychology problem. I recognize this. And that's when I started to work on trading psychology. Book is coming. And I first bought the book Trading in the Zone. So I first got this one, right? Because this one was deemed the magic book for trading psychology by Mark Douglas. Now, I respect his work and I have read the book, but it didn't really satisfy me. In a way, I was like, well, the only thing he really talks about is you should do this. And I'm like, yeah, I know I should do that, but how do I get there, right? And the book didn't really answer my question of, but how do I work on trading psychology, right? What are the steps I have to take? I know I shouldn't revenge trade. I know I shouldn't FOMO. I know I should have good discipline. I know I should have good confidence. But how do I transform from, hey, I have certain weaknesses, to actually getting to my goal? So I kept looking for sources that could help me to improve my trading psychology. And that is when I found this book, which is not very well known, which I mean, I'm changing here with my channel. The Mental Game of Trading by Jared Tendler. I do not know the guy, but I stumbled upon his book when doing lots of research on trading psychology. And by the way, the links are in the description. Those are affiliate links from Amazon if you want to support the channel and buy a book, just FYI. But this book is so good, right? And what I like about this one, which in my opinion is much better than the Trading in the Zone book, right? So we have these two. You have Trading in the Zone and you have the Mental Game of Trading. In my opinion, this one, that's the one you need, not this one, right? So as much as I appreciate Mark Douglas for his career and what he has done in the world of trading, I think it's very, very respectable and not many can copy what he has done. But this book will give you a plan and steps to take, a step-by-step plan to work on your trading psychology, right? And that is what I needed. I needed someone to give me a bit of an approach and a step-by-step guide on how do I get where I want to be? What steps do I... Because psychology is a little bit fluff, right? It's a fluff topic. Like, okay, trading psychology or whatever psychology, I only need the date, I only need the chart. But that's it. You'll probably find out at some point that psychology is a very big part of trading. And I didn't know how to work on my psychology till I read this book. And I read it once, and then I read it twice, and then I made a summary of the book, and then I did the exercises of the book, and I went through the step-by-step plan, and it significantly improved my trading. So I really recommend the Mental Game of Trading. Now, again, Jared Tendler, he is not that famous at all in the industry. He has a YouTube channel. He doesn't have a lot of followers. But let's have a look. I'm actually curious to see how many he has nowadays. Jared Tendler. How many does he have nowadays? Yeah, 7.39k subscribers. It's insane to me. This guy only has 7.3k subscribers, and I'm happy to say I'm one of them. So, guys, if you join one of his office hours, which he does regularly, right? Say hi from me. We don't know each other. I don't know this guy, but this guy himself, just with his book, has really helped my trading. So give him a sub. Yeah. So he's a very he's actually not famous at all in the trading industry. But we are changing it, because I always talk about his book, and I'm pretty sure that many people have been buying his book because of my recommendation. And I don't know, because I just put the Amazon affiliate links in the channel recently, and of course many won't use those links, so that's no problem. But it's such a good book. Yeah. Yes, he has also written The Mental Game of Poker. Yeah, so it's really good. Yeah. So yeah, any other mistakes? I think that pretty much covers it all, really. Yeah. Go against the Oracle's prediction. WXYs could be, yeah. And triangles, they're always tricky. Pleasure, Particles of Time. Yeah, so a WXY is indeed a very sideways, or at least the sideways WXY is indeed generally ranging between 78 and 138, yeah, for your X. In Dutch. Luckily, my English is good enough to be pissed off in English. Yeah, probably Del. Cheers. Yeah, Del. Cheers, Hamo. Would you say the day weekly fibs are most important? Generally, the higher the time frame, the easier Elliott waves is, and the more clarity you have. On the higher time frame, the chart moves a lot slower, right? On a 15-minute, 1-hour time frame, everything moves so quick. On a weekly time frame, things move very slow. So it's a lot easier to be active on a weekly from an Elliott wave point of view, right? So we had this big trend to the downside on the weekly, and there was the potential here for a flat still ABC and still look for another low, right? Probably a scenario that you have seen online. Now for an ABC, we want to take out this high here, right? For a flat. Wait, why is my Control Z not working? So did we take this one here? I forgot. Yeah, so we did take it over here. And then we moved up again. And this is with the second leg up towards 30K. That is where the probabilities changed to more bullish structures, where either we're then looking for potential 3-waver or an impulse. Now this range was incredibly shallow, right? Looking for a flat ABC. Most common for C is to take the low of A, which didn't happen on this chart, did happen on Bybit. But then this is where things started to get interesting, right? Because if you look for an impulse, 1, 2, 3, 4, 5, and you move up towards the 618, taken from this to there, and you hit the 618, invalidates wave 4. So that's the moment where the probabilities turn bullish. And if you're active on a weekly time frame, then arguably in this bull market, right, from an Elliott wave, of course, we had big bullish CVDs here as well, but CVD is generally 1-hour stuff. But on a weekly time frame, that was a great place to buy, and you're not late, right? I mean, you're not late. So that was a great area of interest. And then you look for price to move up, and you're either looking for A, B, C, corrective and a continuation down, or an impulse to the upside. But that all depends on the next range. And because you got such a move up, you also have a lot of patience, right? This range on a weekly time frame, it's nothing, right? It's a very, very small ranging structure. This one is, of course, a bit bigger, but you have time. So, okay, we get a little retracement, no problem, right? I have the time, I just observe the next range, and based on the next range, I make a choice, right? You can manage stop losses. So on the weekly, everything just moves very slow. And from an investing point of view, an Elliott wave trading point of view, it's easier on the higher time frames because it moves that slow. And it provides a bit more clarity. A story about a man that kept, and as such, he always prayed to God for patience, but each day his wife and children would get on his nerves. And so each day he would get more angry than the last, until eventually his time to die came along, and on the way to heaven he spoke with God and asked, didn't you hear my request? I have patience to cope with these stressful things in my life. That's why we're then to give you the practice, you need to be patient. Oh, it's a good one. Good one. I like it. Did he run an Amazon business? Everyone now knows. T. Clepson, Mr. Amazon. Yeah. Yeah, what's up, Carl? How you doing? I heard Trading as an audiobook. It's very repetitive. Made me fall asleep. I think, I believe when I read it, I think the first half is nice. The second half is a bit meh. Yeah. The psychologist training don't impact me when things don't go well anymore, but more so when it does. Enter the long at 56, still in it, but now the head is playing games. Which is also part of, yeah, indeed, like psychology. And everyone has their own problem. So in the book, right, Mental Game of Trading, let me check the, what's it called? The contents. Okay, so in the book, right, and these are just a few. They talk about greed, right? Fear, including like FOMO, fear of losing, fear of mistakes, fear of failure, right? Tilt, The hating to lose, mistake tilt, injustice tilt, revenge trading, entitlement tilt, confidence, overconfidence, lack of confidence, stable confidence, right? Cognitive illusions and biases, perfectionism, desperation, hope and wishing, discipline, right? Impatience, boredom, being overly results oriented, distractibility, laziness, procrastination, right? So, and there's more. So in the book, when we talk about, hey, we're in a position, right? And it's going well, we're in profit, but the head is starting to play games. That's a little bit fear of losing, but it's fear of losing paper profits, right? It has to do with confidence, right? It can have to do with discipline as well. If you have a very set target on the chart and price is not at your target yet, but you feel like, do I have to close earlier? So yeah, it's interesting, and it's good that you're aware of it, because that's the only way to work on it as well. Yeah, I didn't read the poker one. I just know that's where he started. I want to hodl, swing, and learn to day trade. Yeah, I mean, you can. Investing, of course, is a different ball game compared to day trading. Sometimes investing in a way is a bit of swing trading, but yeah. Hard not to care about price. I mean, if I could, I would just remove. So that's the thing. I spoke about this yesterday. Because I make content, I have price on my chart. But if it wasn't for making videos on YouTube, I would not have price on my chart here. I wouldn't have this on my chart, because it doesn't help me having price on the chart. It doesn't add to my trading. I know what I'm looking for. And with everything that I use in my analysis, I don't actually need price, right? I have the fibs, but I don't need... So before... Someone once gave me feedback, can you please use price for the fibs? That's when I started to put price behind the fibs. But of course, I just look for fibs to be hit or not. And I just put alarms and stuff. And also for my entries, I actually don't need to know the price. And I also think that if you would turn price off on your chart, I think it also helps with psychology. It will take a little bit of time to get used to not knowing price, but I really think it. If price is not of importance to your way of trading, I really think it can help with your trading psychology as well. Because what you're then going to do is purely focus on the price action, and not about, oh shit, we're at 60K, 70K, 100K, 10K. You're just gonna trade what's in front of you and not the price, you know. Oh, we have a very quick move up and we moved from 57 to 60, you know. Yeah, I think it can help with psychology as well. I don't need price to trade. Roman, that's always scam. Always scam. Which language is the best to swear? French. Oh yeah, French. Yeah, I guess. Is Biacoin still possible to go down? I spoke about the analysis here. The answer is yes. The potential for a zigzag ABC or a flat ABC. The flat is not that great compared to the ABC zigzag. Yeah, before we move down, you need to see signs of weakness here. So market structure change, volume down, fall back into the range, lose support resistance, CVD, bearish CVD. At the moment we move up, and as long as price moves up on volume, we look for price to move up. Call, that is correct. And actually, they call it a strong guideline at Elliott Wave International. So the rule is wave 4 is not allowed to overlap wave 1, but a strong guideline is wave 4 is not allowed to overlap with wave 1 nor wave 2. And the reason they include this is because sometimes a wave 2 can create a flat or a running triangle where you get a fake high right? So a flat is then the high is a B. And actually wave 4 should not overlap with that price action. It's a strong guideline. And the 618 is not officially an invalidation for a wave 4. The thing is that once we count an impulse and we count a wave 4 hitting the 618, it is so incredibly rare for a wave 4 to hit a 618 that it pretty much functions as an invalidation, because the probabilities are so minimal for 4 to hit 618. You can better look at other structures. So it's better to then look for a double 1-2, for example, right? Where you have a 1-2, 1-2 instead of 1-2-3-4, where your second leg down is a 3 and then a 4. It's better to look for a double 1-2, or it's better to look for a finished ABC zigzag. So other structures will have a higher probability than a wave 4 hitting the 618. But based on the official theory of Elliott waves, the 618 is not an invalidation. That is correct. But I use it as an invalidation, and it also makes it easiest to communicate because it is so incredibly rare. It doesn't make any sense to, oh, we hit the 618, it's a wave 4. Now, there's any other structure has a higher probability than wave 4 hitting the 618. So that's why I pretty much use it as an invalidation. Could you please check the Discord general channel? Let's have a look. Oh. Can you write the same message without trust? Yeah, it must be because of a banned word, like Odin says. Yeah, it's the same, guys. It's the banned word list. Now, the reason we have banned words is to avoid scammers. So, which line on age do you trust more? It might be the word trust. Bearish CVD might be the word trust. So we have a banned word list, and the reason we have it is because of scammers. So I have to have a list like that to keep it as scam free as we can. Now let me show you. I'll show you the scam list. 1 second here. So 1 second, right? I will show you the scam list. How can I remove all of the spelling? Always clear. I want to ignore all the spelling stuff, but anyway. So scammers always use similar words, and in order to keep this channel as scam free as I can, I do have to. So now you know what I'm coping with. The only reason this channel is so incredibly scam free is because of me paying attention to what they write, and I try to use words in the ban list that generally people don't use too much, right? So, but I need to pick a word to avoid them using the comment. Now, let me tell you something. 2 nights ago, so the night from Friday to Saturday, there were 100 scam comments with the word Vematum in my, and they didn't go through because I put it, right? The moment I saw the first comment, I immediately put it in my banned word list. So they were all filtered out. So in my comment section, and this is also a thing when people reply. 1 second, let me show you. So of course, when people reply, when you have koenztrading, I need to review it, and I click on OK. You know, T. Clepson is here, Dara is here. But in the held for review, I had 100 comments with Vematum. Now, of course, I don't have the time to remove all those comments one by one, right? So I just put it as a banned word. But sometimes the comments they use are quite generalistic because they want to try to get through the banned word list and still post their scam link, their scam WhatsApp, their scam whatever. And I don't want people to get scammed. So that is why I need to scan words. Isn't it possible to ban whole sentences? Yes, but scammers consistently change their sentences. So it's better to use a word because they tend to use the same word and change the rest of the sentence. So I prefer to have a word or a combination of words. So you will see in the scam list as well, sometimes there's a combination of words. Do we have an example here? Holy moly, there's so many commas. I still make over. No? Yeah. And the reason my name is in here is because scammers try to copycat me, reply to people in the comments, and try to scam people using my name. So yeah. I just try to protect people the best way I can. Now, to answer the question, by the way, of Dasek, which line do you trust more, blue or yellow? Sometimes it goes against what if the AC. Both. Both are the same to me. It's all about context. If you're at resistance or if you're at support, right, depending on the Elliott wave count, both are trusted as much. Nice that it actually came through now. There you go. So I both are important. It's CVD is context related, right? So on the 1 hour we have the big bullish CVDs, right? Then we did have some bearish CVDs here, but you also have again bullish here. And then it's Elliott wave scenarios. What are the probabilities from an Elliott wave point of view? Do we see signs of weakness locally, right? That's something to look for. So we had the bearish CVD here, right? We had a bearish CVD here. But I mentioned I want to see market structure change, more bearish CVDs before this one really becomes relevant, because we have bullish CVD, bullish CVD, bullish CVD, right? So now both of the lines are as important to me, but it's about the context. Are you at support? Are you at resistance? What's your Elliott wave count? And you got to try and find how you can use CVD in your analysis with your support resistance areas. It's an incredible powerful tool, but it takes practice. It takes practice. In the contents. If it wasn't hard, we'll all be millionaires and we should be prepared for when. Absolutely. I agree. Amen. You know, it's not, trading is not easy. Absolutely not easy. All right. Line with the psychology thing. I think it's interesting how chill you are and just touching away about whatever. There's no stress. It's kind of like sports professional, like, thanks, Jouk. Yeah, look, trading should be, that's an interesting conversation. Trading actually should be very relaxing, very calm. Yes, you put money on the line, but the act of trading should not be stressful, right? And it shouldn't be stressful because of the preparation. You have a plan, you have a strat. You wait for your plan to come to you. The moment you see what you want to see, you enter, you put the stop loss, you put the TP, and you wait. And while the trade is running, you go do something else, right? Unless you're a scalper, you might be on the charts all the time. And then you do something else. And you should know that based on your statistics, you should know if you're a winning or a losing trader. So if your plan, that's why statistics are important. If you know based on statistics that the way you trade is profitable, it doesn't matter if the next trade is going to be a loser or a winner. Because you know that over many setups, you're going to walk away with profit. And trading is never a 100% winning game. You're eventually going to lose, right? No one has a 100% win rate. If you have a 50% win rate with a 1-to-3 risk-to-reward ratio, you are incredibly profitable. But it does mean that over 100 trades, you're going to lose 50 trades. 50 times minus 1%. But all the winning trades, the other 50, is plus 3%. You're a very profitable trader over 100 trades, no? But it's all, so having data, having a clear plan, but then having stable psychology to be able to put on the trade, follow the plan, leave the chart, and it hit my stop loss. Oh, it hit my TP, just another day, right? Just another trade. I know that over 100, I'm profitable. That's the goal. So you can have losing trades, that's no problem. As long as you have, based on data, a profitable strategy. Oh, by the way, chat, I have an idea. Chat, I have an idea. What if in Discord I make a channel at the top with the YouTube banned word list so that you can always check what the banned words are? Hey, isn't that a good idea? No? So now the word trust, I suppose, was in there because now Dasek was able to write his question without the word trust and it worked. But I think if I put and update the banned word list and I put it in Discord, the moment your comment doesn't appear, you can go to Discord, check the channel, see if the word is there, and if it is, I have to remove that word or change that word. You think that's a good idea? It might give you a little bit of insight into what comment works and why maybe sometimes your comment is not appearing. So that it might be helpful to people. I actually think I'm gonna do that. Yeah. I'm gonna do that. Well, I'm gonna write this down. Put the band. Whoa. I think that's a good idea. Good morning, Caleb. How are you doing? Good morning, Don Carlo. Good to have you here. You've been chatting to my wife, I heard. By the way, Caleb, we will be in the south of France on the 31. So we arrive in Nice on the 1st of August in the evening, and on the 2nd of August we bring away the car. So from the 2nd of August onwards we live in Nice, but then we have to, of course, go to the municipality to get registered, go to the notary. I need to register my business and all that stuff. So somewhere in August, we can always have a drink. On which time frame do you look for market structure change? Generally a 15-minute. I like the 15-minute. Of course, be aware of a potential flat, right? A flat is not a market structure change where you have A, B, C. So you take the low, but then you continue back up. So what I then, so look, one of the things I like to see generally, which is also reflected in some of the recent setups that I've taken. Let me quickly circle them. All right. I'm doing this out of my head. I actually missed one here, but I missed this long, but I'll circle it anyway. So these are the recent trades I've taken, right? Short, missed long, short, long, short, right? What I want to see in that case, right, is a market structure change, one, yes, but I want to see waves. So it's always a combination of Elliott waves, a combination with all the like daily naked point of controls, time frame horizontal, support, resistance, CVD, right? But when we talk about structure, look at where I enter my trades, right? My risk per trade is 1%. So I don't enter my trades here, right? I enter here. I don't enter here. I would enter there. I missed this one, right? I didn't take a short here. Neither did I take it anywhere on the way down, but I did take it here, right? I didn't long here, but I longed here. I didn't short here, but I shorted here, right? Nice quick move down. That was a much quicker TP than I expected. So you can see that I generally wait quite long on a 15-minute time frame for structure. Because I know that for me, the win rate for me is more important than the RR. So I prefer to miss out on some profit but have a higher win rate because of my psychology, which is my weakest point. Of course, we spoke about psychology, and my psychology nowadays is very good. So that's fine. But it's still, if I do make a mistake, it's psychology related. And I know that I want to have a high win rate, right? So that it's just from a psychology point of view, it works best for me. Where were we? We were here. We answered these. We started on the weekly time frame, and this move up is just X. So if we do get a bit more confirmation, Julius, of price moving to the upside, of course, bearish and bullish scenarios change. Your bullish scenario is an impulse to the upside, right? And your bearish scenario will indeed change to a complex structure in a WXY. Of course, a flat is also possible, but then you need to move all the way up to all-time highs. So it mimics an impulse anyway. Not very often. No, not very often. I also think it's time to go, because I do have another stream coming later, because we're going to do altcoin analysis in the afternoon here, which will be evening for you, of course. Newcomers will not know it. No, exactly. But yeah, I think Discord would be a good way to at least put the list there. Yeah, if they're smart enough, but luckily for me, they're not. Usually when a scam comment comes through, it's because they have something new, like, oh, did you see, and then this random coin, you know. Good. Cheers, Bettina. Yeah, I'll do it. Do you know the indicator called market? And if yes, do you think it's good? I think it's a waste of money. You can have Market Cipher B for free if you look for the indicators here. I don't know what it's called, but probably someone here uses the free version. Let me explain this a little bit more and then head off. So before spending money on any indicator out there, first use everything that's for free in TradingView. try to build a plan with everything that's here. You don't need more. You don't need a $500 random indicator with a green and a red dot and stuff. You know what I mean? And especially in the beginning, and that's the problem, many new people get tricked into buying this because it is going to revolutionize their life and it's going to make them profitable. And then you buy that random stuff for $500, so you're already like minus. I don't even know how expensive it is. I just used the number 500. And then they're already 500 in the minus. They start trading with that thing. They have no idea. They don't have a plan or strategy. They don't have any confluence with the indicator. They don't have trading psychology that is good enough to trade. So they're still losing, but they already spent $500. So they're starting at minus 500. So start with building a plan with all the tools TradingView is offering. And only once you build experience, you build confidence, you build a plan, then you can try and look, okay, can this help me in my trading? But because you have more experience, you are less sensitive to all the emotional talk, right? In the beginning, maybe people are like, get rich quick, earn money quick, trading is easy. I need this indicator because I'm going to be like a millionaire tomorrow. But the longer you are in this market, the more that mindset is going to be completely neutralized. And then you have, instead of the glasses, like instead of having glasses on your head that say I'm going to be a millionaire tomorrow, you're going to have glasses of experience and knowledge, and you can actually rate that indicator better in like, will it help me or not? But the free version here, I mean, that's just an indicator. Everything that's free, I recommend. Everything that's free, that's what I recommend. So yes, but of course you have the paid version, which I do not recommend to start with. Only if you build experience and you have a strategy, then maybe at a later stage it can be interesting, but not to start with. Do you also trade spot? I don't trade spot, but I do have some spot, but that's more long term, BTC Maxi. To catch up on sleep once a week. Yeah, you're always watching the live streams. It's crazy, Kiwi. Yeah, but now it's evening for you, so, or end of the afternoon. So TP. I'm not in a trade, so I don't have a TP at the moment. I use the free version of Max IBM. Do you have no, I don't have experience with it. But then again, if you use it, it can work, right? Like any indicator can work, but it's about the context. So how do you use it and what do you look for in confluence with your other tools on the chart? And that is what's going to result in, it works for me or it doesn't. If there would have been an indicator in the industry, which is the only thing you need, and you just buy a green dot or a red dot, I think everyone would be millionaires. But yeah, so I think it works in the context of your strategy and your plan. Yes, it's a good tool for free to test with and try with, just like RSI, MACD, money flow indicator, and many other tools. I think it is very useful to experiment with it and see if it works for you. But I then recommend, like you do, the free version and not the paid version. Just try the free version first, see what's up, Salamat Sor, what's up, Adi? Good to have you here. Welcome. Early night tonight. Ready for a new week of live streams. Good luck with the trades, guys. Make sure you trade safe. And that also concludes this live stream for me, because we've been live for 2 hours, and I probably will have another lengthy live stream later today, this afternoon, for the altcoin stream. Okay, so we will be live for an altcoin stream, usually in the afternoon, Central European time, 3 p.m. ish, like always. So make sure you're there if you're interested in alts. We're gonna do a voting at the beginning of the stream, and then analyze, I don't know how many alts. So if you want to check previous altcoin analysis, then go to the channel, my channel. We spoke about psychology and the book. That's why this guy is here. So let me do this here. Koens. So go to the channel, you scroll down to this playlist, Altcoin Elliott Wave Analysis. And if you hover your mouse on top of the title, you can see all the coins that were analyzed in the previous live streams. But maybe today, very likely today, we will do some more that have been analyzed last week. But it will go quick. So thanks everyone for being here. Thanks for hanging out. And yeah, we'll see you later today. Cheers.